Prashant,
there's the global aspect as well, right?
Yeah.
I mean, it's looking benign. It's looking actually
is.
for the first time in a very certain way, it's looking benign, with the Fed chair himself saying that the hiking cycle is done. I mean, unless of course inflation shoots up or anything, but that's not the likely scenario.
Absolutely. In fact, Prashant Khemka is joining and he's a founder at White Oak. So let's pose this question to him. Prashant, thanks a lot. It's really a fabulous time to be an investor, a trader, to just be in this market, right? And soak in the kind of wealth creation that has happened over the last many years and months. How are you feeling at this point in time? And do you think that this is just the start of a structural upcycle in this market?
No, thank you, Sonia, for having me here on the show today. I was just listening to the last few minutes of what you were talking, but as it seems, all the stars are aligning domestically as well as globally, and you enumerated several of them, including the strong GDP growth, the benign inflation. Inflation never really got to a problem stage in India of the kind that it was globally, but still good to see that. And the biggest uncertainty in investors' mind, to the degree it was uncertainty, I think prior to the day before, people possibly ascribed a low to mid-single digit probability of some electoral shock in a few months' time. I think today that's become a further fraction of that probability, and that's what you're seeing in the market reflected today. And a lot of global investors who were sharpening their pencils and wanted to be ready after the central elections, I think would prepone their decision making to maybe this month or next month, as it's around a year-end time frame. So I think that factor, to the extent that it's relevant, is also positive. And as Prashant was noting, the Fed is as reflected in the longer-term bond yields, which have come down sharply off of 5% to closer down to now 4%. So I think globally as well as domestically, stars are aligned for stronger economic growth and hence a stronger than expected corporate profit growth over the coming few years. And it would likely, it's not that the market's has been oblivious to all this. Market has formed up over the last November itself was a very solid month. And now with the outcome over the weekend, I think it can gain further strength from here.
Pull up a company called Dilip Bilkon. It's up 10%, 11%. Dilip Bilkon, it's a contractor, infrastructure company, based out of Madhya Pradesh. And that's at about 432, coming up with very large volumes for this point of the day. We don't usually see it, so just pointing that out. Look at Novama, Novama Wealth, by the way. Citi this morning has put out an initiation report on Novama Wealth with about a 35% upside. So, the street has also been active with sort of widening coverage across a host of sectors where there was little by way of coverage. And look at Gokuldas Exports. Gokuldas Exports is now 4 digits for the first time. So Gokul, it's 1002, 1003, stocks up 5% and looking very, very strong for this point in the day. Prashant is with us. Prashant, good morning. Prashant here. So what are the best ways to play this from here? What can you buy and sit and hold, and not trying to get in and get out, etc. What looks structurally good from here?
Certainly, I think as Sonia was saying earlier, I think it's likely to be more broad-based. 70,000, 75,000. We might, before the central elections, see the sensex cross its diamond jubilee mark, if you will. So it has to be, I think, more broad-based. But we are finding, particularly given where the prospects are and where valuations are, particularly attractive at this stage is a lot of financials across the market cap segments. Financials has so far not participated as much in the rally this year, but I think they're very well poised, given all the environment, the economic environment that we talked about. They're very well poised, and the valuations, when you compare them within other sectors, within India, across other sectors, or when you compare them to financials across the world, particularly, comparables. You can't compare to developed market financials, which trade at a big discount for a good reason. But where you compare them to comparable companies, Indian financials are trading very attractively at this point, we believe. Consumer discretionary, several segments of consumer discretionary should do very well as we move, let's say, over the next few years from, and I'm not talking just 3-6 months, as Prashant, you said, somewhat longer term, where you can sit. I think select consumer discretionary names as the economy moves from 3.5 trillion to 5 trillion, let's say, over the next 3 to 5 years. A lot of the wealth creation that happens would go towards, is not unlikely people are going to buy a whole lot more toothpaste and soaps, but the discretionary items are likely to see acceleration. And then capital goods, select I would say high quality capital goods, because there's been a lot of, and I caveat that because there's been a very sharp rally in capital goods segment, unlike financials and consumer discretionary, which haven't participated that much in the rally so far. Capital goods have seen a sharp rally, but yes, there's a lot going for capital goods, but you have to be more selective. And at this point in time, I would say some of the best quality capital goods still should do very well over the coming years. So those segments, besides what I said, generally there are opportunities across board, but these are segments where our team is finding a greater proportion of opportunities, if you will.
All right. Hi, good morning, Mr. Khemka. Nigel on this side. The point you made on financials is rather important, not just from that sector perspective, but because 30% of the Nifty wasn't participating year to date. And in the last couple of weeks, well, that started outperforming, which is obviously good news for the Nifty if it has to trend up from here. From the financials pack, what's your preference, Mr. Khemka? In the past, I think you were leaning more towards private sector banks, and valuation-wise, some of them are looking delicious. So how would you position yourself, between the private, public sector banks, maybe NBFCs?
Yes. No, very true. I think private sector financials always present a very fertile opportunity set for us over the years or even over the decades. I would say that's been a favorite hunting ground. And I would stretch it beyond just the banks. So private sector financials more broadly, including non-banking financial companies or the NBFCs, but including non-lending companies also, which includes insurance, but including non-balance sheet companies as well. So capital market intermediaries, which don't have a balance sheet business, but more provide service, those are some fantastic opportunities across the spectrum. Yeah, as wealth grows, people, besides consumption and spending, the savings also grow and the investments also grow. And many of these companies are in pole position to capitalize on that growth very profitably. And valuations, as you mentioned, Nigel, this year have lagged, and valuations for very strong, high quality financials on a relative basis, relative to where the rest of the market is and relative to where the rest of the world is, are very compelling at this time, in our view.
Okay. Yes, but the only question is valuations for individual stocks have gotten a bit expensive, right? So where do you or how do you generate alpha in this market? That I think is the big question, Prashant. What is your view on which are the pockets, which are the companies that you can invest into now that will help you generate alpha over the next couple of years?
No, very, very good point to make, Sonia. Some of the stocks have gotten stretched, and we've spoken about this before as well. I think there are pockets of stretched valuation, particularly in domestic deep cyclicals, particularly in small caps. So if I were to name them specifically, one has to be very careful. These are areas, obviously, where the macro looks very exciting. Only when macro looks very exciting do you have such a valuation stretches. So like, be it power sector, be it defense sector, anything related to railways, and there are other such domestic cyclicals. The deeper the cyclicality, the farther have the stocks gone this time around. And you have to be just cautious. I'm not saying all of them are going to be losing money going forward, but you have to be cautious because some of the biggest losses also over time would be made from these packs. And you have to be super selective in terms of the quality of the business, quality of the management, governance, balance sheet at this point in these particular segments. And you contrast that with what we're talking about, financials. They're also cyclicals. They may not be as deep cyclicals, but they're also, if the economy is to do well, from where we are today, if we look at this dichotomy, I would say strong, solid financial companies would do far better than some of these deep cyclical stocks that have gotten overstretched.
By the way, the market is at the day's highest point now. So it looked like there was some tapering off, etc. But we are 300 points plus on the Nifty. The high's been made at 20,602. We're at about 2572. So this is a triple century for the Nifty, which is coming now and looking still very, very good across the board. Prashant, you were talking about consumer discretionary. I believe you guys like Kalamandir, Sai Silk. If you want to just talk to us about that, I mean, as a thesis, right? We had, by the way, we spoke with the management. We had the promoter and, of course, the next gen here at the time of the IPO opening. What's the thought process? I mean, just to give us a sense. Yeah.
So, Prashant, as you know, we can't talk individual stocks, but more broadly, if we talk about consumer discretionary, as you know, is a bit of a hodgepodge of a sector. The index makers, when they cannot find any particular sector that a company belongs to, they either put it in consumer or in industrials, depending on whether it faces it's a consumer-facing business or a B2B business. So consumer discretionary, when I say it broadly includes, retail, an example of which you pointed out, but also includes media, auto, and several other categories. And in each of these segments, there are very exciting opportunities in our portfolio. There are several. The team likes several retail companies. Like I would say, financials in retail, also execution is of paramount importance. So we look for companies which have had a long demonstrated track record of strong execution. And that can be across large cap, mid cap, small cap, and it can be retail. We don't have specific top-down or philosophical bent towards a particular type of retail, meaning a particular category of retail. But in retail in general, there are some very exciting opportunities available across segments. When I say across segments, in retail, for example, there are a lot of names in jewelry, there are a lot of names in general retail, there are a lot of names in electronics, and so on and so forth. And across various categories, the team has identified companies which have very strong execution and have robust growth opportunities. They are gaining market share from unorganized sector and also within organized sector. Despite having a strong position, they're further gaining market share. Some of them are very large, and those names we're very well aware of, and some of them are much smaller at early stages.
Okay.
But depending on the execution valuation, there are opportunities available.
Got it. Prashant, thanks a lot for stopping by. Very, very big day for our markets, right? A momentous day where we have not only hit new highs for the sensex and the Nifty, but it's also been a big political victory for the BJP in the assembly elections, and hence that brings more policy stability to the market, which the market always likes. Thanks a lot for joining in.